is brought to you by realestate.com.au, Australia's #1 address in property. With more properties for sale than anywhere else, we make it easier.
Thanks for being with us here on Business Now. Let's take a look at the auction clearance rates around the country over the weekend. Nationally, 1,880 auctions. The clearance rate here, 54.6%, down from last week's, which was above 57. Now in Sydney, there were 668 auctions. The clearance rate here, 56.4%. But on top of that, there was more than 1,250 properties sold privately. In Melbourne, there were 650 auctions, lower than normal. The clearance rate here below 60%. There was an extra 1,013 properties sold privately. Brisbane had just 77 auctions, but the clearance rate here pretty low, 39%, but there were a further 1,046 sold through private treaty. In Adelaide, 65 auctions, the clearance rate there still strong, 64.6%, and 274 homes sold privately. And in Canberra, 87 auctions, the clearance rate almost 61%, and 77 properties sold privately. Eleanor Creagh, Senior Economist with REA Group. Now, can I just ask, Eleanor, is there a trend starting to emerge with those auction clearance rates and what's happening out there in the market?
Well, we are seeing that, clearance rates are still holding relatively steady compared to the second quarter of this year when interest rates first started rising. So still a little bit stronger than that dip below 50% that we saw earlier this year. But I do think what we've seen is in recent weeks, kind of ahead of that quieter Christmas period, we've seen a little bit more auction activity in terms of auction volumes, so potentially clearance rates coming off a little bit.
So do you think there's any anxiety or haste from sellers, from vendors to try and get their properties away? So do you think they're starting to be prepared to be malleable with their prices?
Yeah, so we always see that before the Christmas period, before that kind of shutdown, that we do see a little bit of a race to list your property before year end, before everyone switches their attention elsewhere and buyers go off on holidays and the like. But certainly I think we are approaching a period where vendors are beginning to adapt a little bit more to the market conditions, which have shifted significantly. We've seen several months of price falls, and we can see that as well in the rate of vendor discounting that we're seeing at the moment. So in October last year, we saw that the percentage of properties that were selling below their list price was around 29%. We've seen that that's increased 20 percentage points over the last 12 months.
So 49%. So almost 49%. Half of every property that goes onto the market, that the vendor is prepared to actually cut the price in order to get the sale.
Yeah, and we usually see that that's the case. And actually, if we look back to previous years, so 2018-19, that vendor discounting rate is still quite a bit lower than it was before this exceptional period that we've seen throughout the pandemic. And I think that that also points to the fact that even though we've got vendors adapting to market conditions now, we have a lot of people out there who just don't have to sell after the substantial price rise.
It's a good point. So the options are, let's be honest, if you're a seller in this marketplace and it doesn't sell at auction, and you put it out there and you put a price on that property, you've then got a choice of either having it stay on the market for a prolonged period of time to try and achieve your price, or indeed you cut the price for the quick sale. And you can weigh that up as interest rates are higher. If you're paying 5% plus for interest, you can work out on a monthly basis what that is kind of costing you.
Yeah, exactly. And I mean, I think we're also seeing that in this kind of environment, vendors are also less incentivized to sell via auction.
Yes.
So, we know the balance of power has very much shifted towards buyers. That's very different conditions from spring last year, where vendors really had that upper hand.
Okay, so then the other ingredient in all this is if you're an investor, and there's obviously an investor demand, it's what rental yield you can pick up out of that property. That's another key here, because if you suddenly need to squeeze that rental yield higher in order to achieve that price, that can be an issue as well.
Exactly. And I mean, I think at the moment, we're probably approaching a point in the first quarter of next year when we do see interest rates start to stabilise a little bit. We will see a little bit more investor activity because we do have this situation where rental markets across the country are incredibly tight. We've got upward pressure on rental prices whilst property prices are coming off. And that does mean that rental yields are strengthening quite a bit from the very low levels that we saw throughout the COVID period.
So the dynamics of this actually mean that it's still having to do the mathematics behind the scene. Whether you're a buyer or a seller, it's all about the mathematics. It's the yield you can get, the interest rate you're paying, your ability to afford that property, to hang on to it during either good times or bad times, and ultimately to not be the forced seller. That's the trick here, isn't it?
Yeah, exactly right. And I mean, I think clearly it comes down to kind of everyone's personal position. And I guess buyers at the moment are thinking, is it a good time to buy with prices coming off a bit? But clearly, with borrowing capacities having been constrained, interest rates continuing to rise, mortgage servicing costs are on the rise. So, over the life of the loan, you might actually end up paying more. So there's a huge balance of dynamics going on at the moment.
It's going to be fascinating. Of course, also those Black Friday sales where it seems that consumers still have capacity to spend means that there's more interest rate pain coming down the track, which is also going to be factored in. Eleanor, Creagh, Senior Economist at REA Group. Always good to chat to you.
Thank you for having me.